Okay, it is a busy day all around. We're going to get right to it. Mike Eppel, good morning.
Hi, good morning. How are you?
Oh, yeah, you know, a lot on the plate. Let's start with a mess, a meta mess. What are you seeing?
Facebook, the parent company now known as Meta Platforms, Melanie, is poised potentially for the biggest single day market value wipeout in Wall Street history. The stock of Meta Platforms is down 20% in pre-market action. That works out to about $200 billion in market value. As Meta reported, a profit, get this, it earned $10 billion. Okay, that's great, except that all of its metrics are slowing down. It's in putting all sorts of money into whatever the metaverse is, to the tune of about $10 billion. It's not seeing the visibility, I suppose, for lack of a better description, on advertising revenue that the tech sector used to see because of Apple's iOS change where it says, allow the app to track. And that is denting some of the advertising generation. And it's having a ripple effect throughout the social media sphere this morning. Looking at Snap Inc. down, Twitter's down. And they're also blaming some of this as well on the rise of TikTok, because maybe that's where the kids are as opposed to being on Facebook.
Where we are.
Where I am. Where I am.
Yeah, I know what you're saying. That's fine. Say no more. Let's talk about Suncor. If we had this conversation a year ago, it'd be very different when it looked at their profits.
That's right.
What are we seeing today?
A year ago, this company was losing money. $200 million was the comparable quarter. This time around, it earned $1.5 billion in its latest quarter. This is the parent company of Petro-Canada. It's benefiting, as all of the energy companies are, from that rising price for oil, which just yesterday came close to $90 a barrel U.S. What's happened, too, though, Melanie, is their profit margins have grown because for the past year, because the price for oil was way down where it was, none of these companies were putting in the amount of money on new projects that they previously did. And then they're also being told, well, electric cars and the shift to green energy. So don't look for as much oil. Well, guess what? Anything that they're producing now is coming in at a much better profit margin, probably 50%, if not higher. So from an investor standpoint, it's been fantastic. And, you know, the stock of Suncor is up 25% year to date. They're probably going to raise the dividend here, as Exxon did. Shell this morning announced a massive stock buyback out of Europe. So it's kind of this weird circumstance for the energy producers. They're making lots of money. The price for oil keeps going up. And then we talk about
gas prices.
Gas prices. Yeah, this time tomorrow morning, $1.56.9 in the GTA is the forecast. It's almost $1.55 this morning, and continuing to climb here. And it's not just us. Let's look. It's pretty much across the country. Out in Nova Scotia, where they have provincially regulated prices, they're looking at a 10-cent increase because it hasn't gone up on a daily basis there. Western Canada's looking at record prices as well. I think Alberta's just shy of $1.50. So even where they're producing oil, they're not getting any break at the pumps, and we're paying for it. And I saw this morning the global price metric for food is at a record high. Gas prices are up, so transportation costs are up. Guess what this means, Melanie? Inflation.
There it is. Mike, have yourself a
The
good
I
day.
word.
Enjoy your day.
Yeah.
We'll talk to you again on Friday.